So guys, how do banks make money? What are your thoughts on how that happens?
Well, I know I have a credit card. I know I have a car loan, and I'm trying to get a mortgage. But I assume that they make money based on the money that they lend out to me, and then the interest that I pay them back, or the fees that they charge me for those loan products, and also those late fees that are unfortunate.
Yeah. Anything to add there, Jonathan?
Yeah, I know they charge minimal fees for certain accounts if you don't, deposit a certain amount. But yeah, I would assume mostly by interest. Uh, yeah.
Totally. Yeah. So the best way to see this is just through a numerical example. So we got the depositor, you or me. Let's say we put $1,000 into Bank of America. Because of what we call the fractional reserve system, big banks in this country only need to keep 10% of their reserves or deposits on hand at any one time. So that's 100 out of this 1,000, and they can loan out the rest. And the rates that they do that at, go ahead, Josue.
Oh, I just said that's kind of crazy that they can loan. They only need to have 10% on hand.
Yeah. Yeah. So like in the 30s during the Depression, when everyone went to get their money at one time, the banks, they didn't have it. And that's called a run on the banks. So not a super secure way of handling money, but they profit a lot from it. And we'll see that from right here. So on average, Bank of America paid 0.2% in interest the other year. That'd be $2 on this 1,000 that you'd make. But they loaned it out on average at 5.2%. And yeah, that's for things like mortgages, credit cards, car loans, student loans. So they'd make 5.2% on that 900. That's $46.80. So some people at first glance would say, oh, they made 5%. Like, that's pretty good. But they didn't actually make 5% because they pay you $2 to make $46.80. That's like buying a stock at $2 and it growing to $46.80. So that's actually a quadruple digit return on investment, 2,340%. And it's because they're always using our money. They're never using their own money. So they profit greatly from this. This is why banks have their name on all the skyscrapers in most major U.S. cities. Like they are profitable. They do well. But we were talking about, well, where do they store their like reserves or deposits? And we mentioned Bank of America has over $20 billion in full life insurance. And that's because long term, they can get a very stable, guaranteed return of 3 to 6%, depending on the dividends that are credited year over year. So
just to be clear,
that's kind of
they pay.
Yeah, go ahead.
They pay me 2.2%. They then use that money to lend it out to get over 2,000%. And then their savings that they have, they put it in a whole life that gets them greater than 0.2%.
Yes.
That sounds like a pyramid scheme.
It's called They Know Money better than the financial mainstream and the information that we all get.
So I live in Florida. So what you're saying is when all us Floridians go to SunTrust, if we all went at once to get our money out, they wouldn't have it because of the fractional reserve system.
Yes. They'd have to either liquidate a lot of places or recall loans, but most likely it would just not be there, and that would be the end of that bank. And that happened somewhat in 2008 as well. So
yeah, and just looking at the current events, obviously things going on in Europe. But I just saw obviously Ukraine limited each individual to only take out $3,000 out of the ATM because they don't have enough. So what happens is now the lines were ridiculous, trying to get at the bank, people trying to scramble to take money out. But imagine if they're going to be away from home for 6 months to longer. Who knows when they come back? In a sense that they leave. Do you think they're going to live
Mm-hmm.
off of $3,000 for 6 months to a year? Let's say.
And
So
yeah, that's it. Yeah, when tough times come, banks aren't the place to have your money. They aren't
Absolutely.
as
Yeah.
beacons of safety that we kind of paint them to be.
Yeah, which is incredibly interesting because we don't really think about, in the worst case scenario, do I really trust the bank in a sense?
Mm-hmm. Yeah. Whereas a major insurance carrier that we're familiar with, they've shared that if every single one of their policyholders died at one time, they'd be able to have enough money to pay out every single death benefit and still have money left over. So dollars are backed by real dollars with insurance, and they're much safer. They've paid out dividends for over 100 years straight through times like the Great Depression and the housing market crash in 2008, COVID. And that just shows that like a dividend is a surplus, it's profits. And for them to be that consistent through hard times means they got a solid business plan that makes them a good place to store capital.
So just to be clear, if I created a savings account within a whole life cash value plan, I can trust that that savings account is going to be there in times of war, in times of depression, in times of need, or at least I can trust that more than the banks. Is that what you're saying?
Much more. If banks went out of business, like the insurance carriers they'd be the last to fall in hard times.
Wow. I mean, yeah, it's definitely big.
Yeah. Cool. Well, thanks for your guys' takes on this, helping us learn about banks. We'll see you again soon.